Welcome to Finance Deep Dive. There's a really fascinating puzzle at the heart of the US stock market right now. It's like, depending on where you look, you'll either see a story of incredible success or one of some pretty serious struggle. So let's break down these two completely different stories that are somehow happening at the exact same time. So on the surface, right, the headlines look fantastic. The S&P 500, which is a huge benchmark for the market, is showing really strong profit growth. A lot of that, and I mean a lot, is being driven by big tech, which just delivered another amazing quarter. Wall Street is absolutely cheering. But if you look just beneath that shiny surface, you start to see some cracks forming. In this video, we're going to peel back those big headline numbers to show you a much more complicated and, frankly, a much more divided picture. What we're really seeing is a market that's fundamentally split right down the middle. It's not one big happy story of success. Nope. Instead, we've got two completely different economic realities playing out at the same time. And this slide really nails the divide. On one side, you have the giants. These tech titans are just launching into the stratosphere, powered by all their innovation and global reach. But on the other side, you got smaller, local businesses that are basically caught in a trap, getting squeezed from all sides and just fighting to survive. All right, so let's start with the winners. We're talking about a very, very small, super exclusive club of tech giants. You've probably heard them called the Magnificent Seven, and believe it or not, they're responsible for nearly all of the market's growth right now. Their success creates this powerful, self-reinforcing cycle. It's amazing, really. Their dominance in things like AI and cloud computing just generates enormous amounts of cash. And that cash, well, it lets them keep their profit margins strong and reinvest in more growth, which in turn powers the entire market's gains. It's like a flywheel that just keeps spinning faster and faster. Okay, but what about everybody else? I mean, for the small cap companies in the industrial firms that really make up the backbone of the economy, the story is not one of booming growth. It's a story of survival. So while big tech is literally swimming in cash, these smaller firms are getting squeezed from every possible angle. I mean, just try to imagine running one of these businesses for a second. Your borrowing costs are up, customer demand is slowing down, and you can't raise your prices without losing the customers you have left. It's a recipe that's just crushing their profits. So what's the one big thing that's driving this massive gap? It really all boils down to one simple thing: the cost of money. High interest rates have become the great divider. I mean, think about it. Huge companies with mountains of cash sitting on their balance sheets, they can handle the pressure. But for smaller firms that actually rely on loans to fund their operations, to fund their growth, rates this high aren't just a challenge, they are absolutely crippling. And this is why looking at a simple chart of the S&P 500 can be so misleading. It's kind of like a group project in school where one or two star students do all the work and the whole group gets an A. That's what's happening here. This concept is called market breadth, and right now it's telling us that most stocks, the rest of the students, aren't actually participating in the rally at all. And that is a huge sign of weakness, not strength. This deep division really puts the entire market at a crossroads. And depending on what happens next with interest rates, we could see one of two very, very different futures unfold. So this brings us to two potential paths forward. First, if rates stay high, the pressure on all those smaller companies is just going to get worse, and that weakness could start to spread, causing some serious volatility. But on the other hand, if the Federal Reserve pivots and starts cutting rates, it would be like throwing a lifeline to these struggling companies, and that could set them up for a massive rebound. This quote just perfectly captures the moment we're in. The U.S. economy isn't collapsing, that's true, but it's not evenly strong either. The real story here is this profound imbalance between the haves and the have-nots. And the biggest question for every single investor right now has to be, how long can that imbalance possibly last? Thanks for watching. If you want more videos that cut through the noise and show you what's really going on behind the market headlines, make sure you subscribe. It really helps us out. We'll see you next time.